Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. Well, the headache seems to be gone as the market yesterday made a superb combined key reversal up, bullish engulfing pattern and bullish long white Mariposa. The action highlighted the two core patterns here that I've previously spoken about. I've highlighted the relevant trend lines in blue to help visualize what is going on. We have a September to date ascending triangle, currently 98.22 to 99.57, and a September to date bull channel, currently 98.22 to 101.57. The bull channel could actually be a rising wedge, and I'll consider that shortly. The real issue in recent days has been that both patterns had false breaks within the last 2 weeks. There was a false break above the upper trend line of the ascending triangle 2 weeks ago that turned into a pipe top, and a false break below the lower trend line for both late last week that turned back up last Friday and ended up closing on the upper trend line of the ascending triangle of all places. This was followed through higher this week, seemingly stalling once again at the very next resistance, the declining medium moving average at 10024. But though both patterns had been compromised, both patterns have repaired themselves, and we're now breaking higher over the ascending triangle and yesterday over the bull channel, upon which upon reflection I will indeed call an ascending wedge pattern. Yesterday prices closed up over the upper trend line of the ascending wedge pattern, as well as the middle time, currently 101.47, of the broken but still influential January to May 2021 bearish Andrews Pitchfork, plus the November 2002 high at 101.70. So, with all this action, we must now look topside and see what are the opportunities for these patterns. Now, I've previously listed possible targets for the ascending triangle. The primary target X in the 102.65 area, and a secondary harder to reach target X1 in the 103.65 area. To these I will now add possible targets for the ascending wedge pattern. A primary target X2 in the 105.65 area, and a secondary harder to reach target X3 in the 107.65 area. Of course, this will all depend on this move higher being a genuine move. So far today, a basing action on the broken upper trend line of the ascending wedge pattern, and a move higher such that prices have punched up through the April to date downtrend, currently at 102.55, and reached the primary target for the ascending triangle pattern in the 102.65 area. Cable, aka sterling against the US dollar. Less of a headache here as well, as the market yesterday made a combined bullish engulfing pattern and bullish long white Mariposa that punched up clear of the flat trend line, currently at 115.05, of the recent ascending triangle, as well as the declining medium moving average, currently 116.52, only to halt at the upper trend line, which is currently at 117.58, of the recent ascending wedge pattern. Now, to recap my earlier comments, much as in Eurodollar, there are two core patterns here. I've highlighted the relevant trend lines in blue to help visualize what is going on. We have a late September to date ascending triangle, currently 113.44 to 115.05, and also a September to date ascending wedge pattern, currently 113.44 to 117.49. Both patterns have been previously compromised and both have repaired themselves. This week we've had a break higher over the flat trend line of the ascending triangle, giving possible targets of target X in the 120.20 area and a secondary harder to reach target X1 in the 122.5 area. We have not broken the ascending wedge pattern as yet, but I will keep a close eye on that going into next week. Now, so far today, a basing action on the declining medium moving average for an attempt higher once again at the upper trend line of the ascending wedge pattern. However, so far prices have not penetrated it and have pulled back to look like an indecisive spinning top for today right now. Euro sterling. A reactionary bearish engulfing pattern yesterday, causing the possible construction of a pipe top over these past two sessions, as the market faltered ahead of testing the 50% Fibonacci line of the March 2020 to March 22 move at 88.51. The move lower closed below the April 2021 high at 87.19, as well as the rising short-medium moving average, currently 87.18. I suspect the halt in the decline may have in part been due to the short-medium moving average and April 2021 high combination, but more due to the breached but since repaired lower time, currently 86.77, or just below, of the bullish April to August Andrews Pitchfork. So far today, a counter-reactionary move back up over the short-medium moving average and the April 2021 high, but not by much. US dollar against the Indian rupee. A big combination yesterday of a key reversal down, a bearish engulfing pattern, and a bearish closing along Black Mariposa, which to be honest is a bit of an overkill, given the previous session was an indecisive doji cross. Nevertheless, the market punched down and closed below the rising short medium moving average, currently at 81.27, as well as the recent 50% Fibonacci line at 81.13. The market closed right on the lesser Fibonacci line at 80.63. I now need to discuss the larger scenario which I had previously mentioned. I had highlighted how we may have a September to early November expanding wedge pattern. Late last week, prices had pushed down through the lower trend line, which is currently at 83.26, and the move lower since then has confirmed the pattern. Hence, we had a primary target X in the 80.70 zone and a secondary harder to reach target X1 in the 80.28 zone. Yesterday, the market reached the primary target and supposedly halted at the lesser Fibonacci line, but I suspect it may be the market being shy of testing the rising medium moving average. That's below, currently at 80.46. Beyond this, we have a gap below dating from September between 80.06 to 80.18, which is significant, and then the August to date uptrend currently at 79.89. Now, I should mention that this uptrend is part of a July to September ascending triangle pattern, which was successful, but which has its upper trend line currently at 80.02 in there as well. So far today, well, an attempt lower, a gapping attempt lower, I should emphasize, but one that has been filled and has again shied away from the rising medium moving average below, making today look like a possible reactionary bullish thrusting pattern right now. US dollar against the Brazilian real. A huge bullish opening along White Mariposa yesterday, which was more than adequate follow-on to the previous session's bullish engulfing pattern. The market punched up and closed over the following: the short moving average currently at 522.21, the short medium moving average currently 522.46, the medium moving average currently 524.01, plus the 50% Fibonacci lines of the March 21 to April 22 move at 522.76 and the May 20 to April 22 move at 538.13. The market also breached the upper tide, currently at 537.28, of the July to August mildly bearish shift pitchfork. There was even a point when I thought we might be on for a monthly key reversal here, but prices did not manage to reach that high, though I am still mindful of the possibility, despite the lower close. All this really counters last week's weekly key reversal down. US dollar against the Mexican peso. A bearish engulfing pattern yesterday, offsetting the previous two sessions' bullish white soldiers. More importantly, it was a new low and low close, not seen since February 2020. It seems a previously highlighted combination of the broken upper tide, currently at 1964.47, of the March to July bearish Andrews pitchfork, and the middle tide, currently 1976.79, of the still intact bearish shift pitchfork for the same move, is continuing to have its effects. The latest casualty was the 2022 low at 1940.70, which is now resistance. The next congestion below is now the March 2020 low at 1915.03. So far today, well, a further drop today, a further dip today to make a new low not seen since February 2020, but the market's pulled back up a bit and is on the borderline between a hammer pattern and a bullish belt hold pattern. And I'm more inclined to think of it as a bullish belt hold pattern. And if that's the case, it's very, very interesting, because bullish belt hold patterns are one of the strongest patterns that are out there when they occur. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.